So there are high premiums right now. I think anyone who's bought silver recently has seen the premiums have skyrocketed. They're almost at crazy levels. It's basically a function of supply and demand. On the supply side, first you have the U.S. Mint winding down the productions of the 2022 dated coins. Obviously, it's December 2022. You have some mints that are done with the 23. Some are still in the process. That's the first thing. The second thing is we are seeing a trend change on the APMEX side where less customers are selling metal. So typically we would get an inflow of metal from retail customers. And then that is now declining too. So a lot more people are holding on to metal in the past couple of years than let's say 10 years ago. And then third, there's a shortage of blanks. So it's important to note that a lot of these mints, especially the U.S. Mint, they don't make their own blanks. So these are the round discs before a coin is stamped. They actually have to source it from a third-party production company. And what's happened in the past couple of years is you've had the crazy demand in 2011, 2012, and then you had a whole bunch of flat years where the metals did not do any much. So you had 2013 up till 2019. I mean, anyone who's looked at the metals chart see that the metals really didn't do anything. So these third-party companies have almost right-sized their production for lower volumes. And then obviously 2020 comes, you have a spike up in demand, and now these companies cannot keep up. So that's what's kind of going on, on the supply and demand side. I mean, we've been seeing crazy demand. I mean, APMEX has been in business for over 20 plus years. We've seen some of our busiest days this year. So basically, it's like tightness in supply, high demand. That's creating unusually high premiums on the retail precious metal side, but we could get into the wholesale side too. It's a little bit different over there.
With this, a lot of people tend to think, when there's a shortage, they equate that with the actual silver miners that are not pulling enough silver out of the ground. So it's actually really a product of supply and demand that is causing this slowdown, this bottleneck, not a shortage of actual silver.
Yeah, and I think a good analogy too is and I can't say if this happened in Singapore, but I can tell you in the U.S. when COVID first hit, people ran out and they bought all the toilet paper they could. I don't know why people did that, but that's what happened. And what happened there is, if you went to any of the stores, Target, Costco, whatever, over here in the U.S., you couldn't buy toilet paper. But sure enough, the supply chain's caught up and toilet paper is now readily available. So if you look at right now, the same thing is happening on the metal side, on the retail side, on silver is like you have these bottlenecks. You have the blanking company, you have the mints, you have a lot of parties in the supply chain that cannot catch up right now, and demand is just crazy. So you are seeing, it's basically supply and demand. I mean, obviously there's not a lot of supply, so the prices go up. But the demand is a little bit different on the wholesale side. If you want to get into like 1,000-ounce silver bars and grain, we're not seeing the crazy premiums over there on that side.
I was going to ask you about that. How is the supply with the 1,000-ounce LBMA bars? Is it getting kind of tight, or is it still pretty easy to obtain? And are you seeing more people moving into these 1,000-ounce bars?
Yeah, so let me just start by saying we need 1,000-ounce bars for one gold. We primarily don't sell a lot of these to retail customers just because they're clunky, they're hard to authenticate, and so on like that. But we buy 1,000-ounce bars for one gold. As a data point, we've done about 3 million ounces of silver just this year on one gold. But the 1,000-ounce bars are still available. We're currently paying about 34 cents over spot, so much different than the Silver Eagle market where they're selling for like $13 over spot. But I can tell you that inventory is getting tighter. So before this whole pandemic mess, so let's go back to 2019 when we first started one gold, we were paying about 3 cents per ounce over spot for 1,000-ounce silver bars. So like it is basically 10 times higher, but they still are available. And that's one thing that I like using one gold because it gives me access to silver at the lower premiums. As I mentioned, we're selling silver for 2% over spot, 48 cents. We're making a couple cents on it. I'm getting exposure to silver right now. And then when premiums go down, and we are seeing premiums contract in the last couple of weeks on the gold and silver side, I could then redeem it out and get the silver, and I don't need to pay $13 over spot. Maybe Silver Eagle premiums drop down to $5 over spot. I could then get into there and one of the things I always tell people too is like you want to speculate on the silver price. You don't want to speculate on premiums. So silver's $24 right now. Let's say you bought a Silver Eagle at $14 over spot. You paid $38 all in. Let's say silver went up from 24 to 30. You were right. Good call. But silver premiums went down from that $14 to $5. So you paid $38 for the Silver Eagle. Now your Silver Eagle selling for $35. You lost money despite silver going up by $6. So I said, you want to get an exposure to silver. I'm personally doing it through one gold, but physical is also great as well too.
If you could you tell us a little bit about the grain? Is there actually a market for the grain?
Yeah, so we buy grain. We actually have a subsidiary mining company called Nine Fine Mint. So we actually make a lot of products, Atmex bars, Nine Fine bars. We make some rounds too as well. In the last couple of weeks, we've been doing about 200,000 ounces of silver per week. Grain still is available, but it is getting a little tighter than what we're used to. But we could basically get everything we need on the grain side.
Can we go back a little bit in time, and if you could tell us what it was like during the original silver squeeze a few years back? I mean, what were sales like, and what was it like trying to replenish stock?
Yeah, that was a very interesting time. So the silver squeeze, one thing I remember too is it happened during the weekend, and ideally we have a lot of inventory downstairs. We have almost $200 million of inventory down in the basement in our vaults over here in Oklahoma City. We would typically sell as much as we can, but what happened too on that weekend is we typically hedge our position. So we forecast what sales are going to do over the weekend because the markets are not open. So we forecasted it, and obviously the silver squeeze happened. I believe it was Friday evening or something, Friday, Saturday. It was sometime over the weekend. And then we could not adjust our positions. We could not adjust our hedge position. So what happened is you saw Atmex, you saw One Gold, you saw a lot of these other precious metals retailers basically pause sales because we could not hedge. Fortunately, Atmex, what we did too is we started buying a lot of inventory over the weekend. We called a lot of our wholesale partners up. We were able to buy some and then sell that metal that we just bought. So obviously that metal's unhedged. We sold it and then we could sell a little bit more. But that basically caused premiums to go way up because you saw like a lot of demand. Inventory basically got depleted in so many different areas. Premiums go up. It's a function of supply and demand. But it was interesting times. But I mean, fortunately, we didn't get burned on the market movement. But it worked out well, and I think it was a good time.
So you expect, I know it was at that time where we really saw premiums move up, and they've been kind of slowly deflating and coming down. Do you think, will we ever get back to that normal type of a premium, or is it going to be a newer, little bit higher premium that's going to be the new normal?
So I think premiums will decline. Starting with the gold side, we are hearing news from some of the mints that they are going to ramp up production. So we expect sometime in 2023 that premiums for gold will normalize. And normalize, we'll see what that exactly means. I don't think they'll be as high as these levels. Silver's a little different. I still think silver has a lot of issues with the supply chain. And then, as I mentioned too, you had a lot of these third-party blanking and production companies almost like decrease their capacity as a result of seeing metals not do much from 2013 all the way to 2019 too. So there is not as much capacity in the system right now. So I think premiums will go down, but whether they go down to levels we've seen in 2018, 2019 on the silver side, probably not, but probably somewhere between that level and where we currently are.